screen in the morning, and that continues as we approach the last hour of trade. This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Mangalam. Guys, good afternoon.
Hi, good afternoon, Prashant. It's your birthday impact, I think. That's what the bulls are celebrating, because usually we've had these wobbly days, range-bound action, not participating or in sync with the global move. But today, it's all green. We're practically at the highs.
But at the highs, what can one say? Birthday or no birthday, Prashant is just very happy right now.
The good luck charm. Yeah.
I think rose banate hain, but 150 point rose, nifty.
Well, you know, we're still about an hour away from close. What's interesting is that the Nifty is holding above 24,700. 24,700 was the upper end of the range.
Yeah.
The Nifty Bank is holding above 50,900, which again is slightly, only marginally above the 20-day moving average. And even the financial services index, that's just above the level where we have the maximum amount of open interest when it comes to calls. So we're a little higher than the outer end of the range. The question is, do we break out in the last hour? Or maybe the market puts its invisible hand once again and says that, no, this is the range that you're working with. That is when we'll know, whether your birthday party actually works out here or not. It'll be damn fun.
I think, if you were a betting man, I am not. I think we break through and we kind of head higher and perhaps, the path to all-time highs, which is not very far away, 25,078, right? Yeah. You need two good days and you're there. So hopefully we are headed there. So as you said, the Nifty is trading above the 24,686 level, which is the upper end of the gap area. It's, of course, it respected the 20-day, never once did it head back to that level. So it's kind of above that as well. And 25,08, of course, is the next sort of target, which is the previous all-time high. I think, and why not? And we were talking about this in the morning, and it was true yesterday as well. Of course, yesterday things fizzled out, and the Nifty ended with about a 30-40 odd point gain. Global markets have very quickly realigned to the earlier narrative before this volatility in the beginning of August, which is essentially, not too hot, not too cold, perfect conditions for the market to cruise along. You look at what's happening in the US. So I think you're seeing some of that here as well. Bank Nifty is also, that's the one. It's finally trading above the 20-day moving average. The Nifty Bank, it never got to it. That was 50,761. We're at 50,900 plus. Here we are, I think 51,100 or so is the upper, the corresponding 24,686 level, which is the upper end of the gap area. So it's a bit more work here on the Nifty Bank because it's underperformed the Nifty. And apart from, and it's, if you want to disaggregate what's happening with Bank Nifty, actually PSU banks are doing much better. Not weight-wise, of course, but, the index is higher. The private bank index is higher as well. And outside of banks, IT and pharma are the other two indices, 0.6 and about 0.4% gain. So overall, a pretty decent looking screen is what we have. And we'll see, as we were discussing, whether the markets got in it to take out this range and perhaps head to the previous highs over a period of time. Surabhi.
Absolutely. The only sort of fly in the ointment could be the fact that right now global markets are not holding on to that kind of an enthusiasm. Europe is flat. You had Japan, of course, building on gains. Wall Street futures for the time being are a little flat. It's going to be more about, of course, the end of the week action, Jackson Hole, and what you get, in terms of all the central bank commentary. That's Europe for us right now, so flattish trends coming in. But here on our screen, it's a big party out there. Look at the mid-cap index. It's up about 0.7%. And if you look at the advance decline ratio, then those lines are really nice and broad. Over 1,500 stocks advancing in the market right now. And just to give a sense or a flavor of what's happening in the mid-cap market, look at the way stocks are flying. KEI Industries as well as Polycab, and we'll talk about these stocks as we go forward, especially KEI actually. It's up about 8%. There are some brokerage notes that are sounding very, very optimistic on some of these wire companies, talking about the big play on electrification. So that's working well for these stocks. Something like a nuclear software, there's a impending corporate action, a buyback that's in the offing. 20% up. But even if you go beyond news, the movers and shakers, look at Poonawalla Finance, 7% higher. Godfrey Phillips, second day running, 7% again up on that stock. Angel One, the move started, just a couple of days ago. It's continuing today with a 12.5% sort of a up move that we're talking about. All cargo logistics, I think it was the business update that came through, the monthly update that seems to be working well for some of these names as well. So short point is that the mid-cap market is very vibrant and the large caps are firing away. Both the engines, banking and IT, both turbocharged today.
Well, I'm looking at two things in particular. The first one is, the theme that Ramdev spoke about yesterday when he said that BFSI is going to do well, but BFSI not necessarily implies banks, even though banks are doing a lot better today. Look at all the insurance companies up anywhere between 3 to 4%. And these are the bigger ones that I'm talking about. Case in point, something like an HDFC Life Insurance, SBI Life, you have ICICI Pru Life, all of them higher. And these are nifty stocks, the first two at least, they're doing extremely well. And then you spoke about Angel One. Look at the other capital markets theme that, Ramdev did speak about as well yesterday. So IIFL Securities is up around 13%. We're seeing a decent traction on something like ICICI Securities as well, which is up around 7.5%. And good traction on all the other names, which
Motilal is up, I think, and of course Angel Surabhi mentioned. Motilal Oswal is also
Motilal Oswal itself is up. So you're seeing some traction in the BFSI, non-banking BFSI space in particular. And that, ties in with the Tuesday theme, which is the financial services expiry. The second thing is that irrespective of valuations, there is momentum. He spoke about two stocks. He spoke about Zomato. He spoke about Trent, right? Look at Zomato. Zomato, saw that large trade take place in the morning. It was at a discount to the prevailing price, and from there itself we've seen the stock flatten out. So that supply was absorbed and the stock moved higher. For most part in the second half of trade, the stock was in the green. The other one is Trent. Look at Trent. Profit taking in the earlier part of today's trading session, that dip has been bought and how the stocks moved to the high point of trade. So is that going to market?
Yeah, no, absolutely. On these brokers, they're all higher, and Angel is up, I think, 20-25% yesterday and today combined. Yeah. Today is the last day for market participants to submit their feedback on the
FNO consultation paper.
FNO consultation paper. Usually the feedback goes from associations like ANME, and large brokers submit. Now, I don't think, I'm not sure how that ties in with stocks which are doing well. Maybe just, Angel, etc. were completely bombed out. High was 4,000, their stocks had fallen to, and that's the leader, right? Out of the listed space, it's the most well-diversified, well-owned name. It had, I think, fallen to 2,000 to 2,100 kind of levels, but it's quickly picked up to about this 2,600 levels. We're actually trying to get a sort of sense of what is the feedback which has been given. SEBI proposed something that asked markets for the feedback. That feedback is being given, and then, of course, the SEBI will consider and then finally issue directives. If you remember, lot size and, one expiry per exchange per week, those kind of things. So that is another thing to take note of. But more on all of this as we go along. We'll talk about what's down as well, and what's down is shipbuilders, and Hormuz comes in in just a little bit. But how should you position yourself in terms of specific trades? Mitesh is with us to help us with that. Mitesh, over to you. What do you have, and what should one do?
Yeah. So Prashant, throughout the day, the theme is that the bank nifty could be possibly coming back into action, come out of its underperformance mode. I think it's done that. Managing to get past 5750, 5800 was a good event, and now we're sustaining about that. I think longs can be taken with the stop below 5730. And if this sustains, which I suspect it will because the indicators have started turning up, then 51,450 and then 51,800 are my two targets on the upside. So maintaining a positive bias. In fact, I have Investment Bank as one of my recommendation. I think, that's another stock which, like Kotak Bank, I think came out from a big decline, and then we have seen the stock trying to come out of oversold levels and reverse. Recommend a buy here with a stop at about 1365 and look for a target of around 1415 to begin with, and in the best case scenario 1430. And the other one is buy on Indus Tower with a stop at about 417, target of 440.
Okay, all right, got that. Thanks very much, Mitesh, for the calls. We'll come back to you in just a bit. Well, while we're talking about a lot of the pockets of the market that are doing well, the one area which is seeing profit taking is actually the CPSE space. This is again a follow through from yesterday. Yesterday was day one of some profit taking. Even today, the CPSE index is underperforming. And some of these stocks, the shipbuilders owned by the government of India, they are the ones that are really taking it on the chin, specifically the PSU names and even some of the non-PSU ones. So what could be behind this? Is it just profit taking after what has been a mammoth run? Let's go across to Hormuz. He's poring over the technicals and the valuation picture. Hormuz, fill us in.
Just about a month and a half earlier, we had highlighted as to how shipbuilders of India have run up significantly and how their valuations have shot through the roof. Now, these stocks have been wobbly a little bit since then, and today is no different. Now, all three of them, Mazagon Dock, Cochin Shipyard, Garden Reach, all of them are trading with losses of anywhere between 4% to 8% in today's session. Now, it was on the 5th of July when we reported to you about this, and that very day, both Mazagon Dock and Cochin and Garden Reach had topped out for the time being. And Cochin Shipyard topped out the Monday after that, which was on the 8th of July. And since then, Mazagon Dock is down 27% from those levels. Cochin Shipyard is down 31%, and Garden Reach, which en route to its record high had even doubled in 1 month, is down nearly 40% from those levels. Now, a lot of commentary came in as to whether these companies would be able to deliver in the June quarter, and they did to a certain extent. Now, lower expenses meant that Mazagon Dock's margins leapfrogged from just under 8% last year to well over 27% this quarter. And Cochin Shipyard's margins also saw a healthy expansion. Garden Reach struggled a little on the margin front, but revenue growth was decent during the quarter. Now, a 30 to 40% correction is significant in any stock, but when these stocks have doubled, tripled, or even quadrupled in value, that number pales in comparison. Now, take a look at this. Now, until the 30th of June, Mazagon Dock shares were up almost 90% on a year-to-date basis. Cochin Shipyard had more than tripled, and Garden Reach was up nearly 2.5 times. That shows the frenzy that these stocks had during this period. But not everybody has been gung-ho on these names. ICICI Securities is one such brokerage. Now, even when these stocks were shooting through the roof, it was bearish on these names, and it continues to do so. His recent note on Mazagon Dock projected a 77% downside on the stock with an 1165 rupee price target. Yes, expecting the stock to fall to 1165 from a high of nearly 6,000. Now, it believes that while margins for FY25 and 26 will remain elevated, they will taper off once these new contracts are executed. Now, even for Garden Reach, ICICI Securities had a price target of 515 rupees, which is a 73% downside. Now, it believes that Garden Reach's EPS will remain in a range, and execution issues will also emerge for the Bangladesh orders that they have won there because of the geopolitical unrest that currently plagues the country. So even after all of these corrections, are these valuations now reasonable? Well, not really. Cochin Shipyard still trades at 45 times 1-year forward PE. The 5-year average, 14 times. Now, the story is no different for Garden Reach as well, trading at 30.5 times 1-year forward. Its 5-year average is 17 times. Now, it should not come as a surprise that these stocks are witnessing some correction after such a frenzied rally. After all, who would not want to take some profits off the table? But for those who are victims of FOMO and jumped in at higher levels, their ship has definitely hit rough waters, at least for now.
Right. That's super interesting, Hormaz. Thanks very much. But you know what? I guess life is always relative. So when you say 35 times, 40 times, it looks better than 90 times, right? Which is what many other stocks in the market are trading at. Just a quick follow-up. This ICICI note, which is still calling for a massive downside on these stocks. So how recent is it, or is it an older?
It came on the 16th of August. Yes.
Oh, okay, so this is the updated note.
The gap between the price targets and the actual price, should we call it what, Strait of Hormuz?
Well, if you are a bull, you would say that they raised their price target on Mazagon Dock. Actually, they had a 900 rupee price target. Now they have raised it to 1165.
How generous!
Some cushion there, yes. Some bits of cushion at least for sure.
Guys, we have Deepak Shenoy with us.
Yeah.
Who's Deepak? Hi, good afternoon. And Deepak is someone who's actually put out. He did a tweet thread on Mazagon. And this is today, so well, it's a good day to have you with us, Deepak. You want to take our viewers who've not looked at your thread? You sort of go in a chronological order, looking at all the times when they put out notes and where price was and what it did after that.
And I look at this. Okay, I started off a long time back because SBI would every time come in a press conference and say the worst was behind us. And then the next quarter, they would announce really bad results and then again say the worst is behind us, and kept doing this, right? So I chronicled this over like 10 years. And then when they stopped saying it is when the market kind of allowed them to rise, or the worst was actually behind them. But what happened in this particular case was somebody forwarded this, and we own Mazagon Dock. So I had recently cut down roughly 50% of my position because it had gotten too big. But what had happened then was somebody sent me this, this analysis. And then I just took a look at what the same house had said in the past. And it turned out they've been bearish since the price was, I think, 600 rupees. So it's now from 5,000, it's fallen to 4,300. So from 600 rupees in 2022, they've been bearish all the way till now. And, the price has gone up considerably since then. So like Hormus said, the price target has also doubled. I mean, in a way, if it was 600, now the price target on the downside is 1,500. The company's done fairly well. I mean, it's a company that actually has negative working capital. So in that context, does not have to pay any interest on what is effectively a government service business, where the problem usually happens to be that their cash flows won't be as good. But relatively speaking, they're in better financial shape. But even then, I mean, this is not so much a fundamental analysis here, but talking about price targets, if you give price targets, the market will hold you to it. We don't give price targets. We don't know when we buy a stock how much it will go. I have no idea. So, but if I told you that this price will go to 2,000, you would be rightly, in your right to say, Deepak, it's been 4 years since you've had 2,000. The price is still not even half from that price on the upside. So if you give me a price on the downside, at some point people will have to hold you to it, right? So
take that point. Fair point there, Deepak, and an interesting one at that as well. But speaking about prices, one of them which is now seeing a big correction is Ola Electric. Over the last 7 or 8 sessions, we saw the stock, keep moving higher. Today as well, opened fairly higher, almost 7 or 8% at one point in time. It doubled from its listing price, or rather issue price, in just about 8 sessions. Not a lot of free float available, but now let's look at it. It's down 15% from the highs. Do you think it's turned, or is it just one of those days? I mean, where do you stand on Ola Electric?
It's interesting because they did some kind of an announcement thing recently where they talked about the actual large wheel bikes. The current wheel bikes are really small wheels, so they don't work well in places where the roads are not as good. So the large format wheel bikes and their other stuff in their battery cells and all that are quite interesting. I think that way the story has to play out. So there's a lot more that needs to come. These things need to get to market. We need to see how they actually are received all over India. From a fundamental perspective, I think we'll have to wait at least till one result to see how their financials seem to be performing. They have some back issues with battery, and the segmental results have only recently been demonstrated in their presentation. But right now, the stock is going to be flying more on the basis of the lack of float than anything else. And after a month, the anchor investors of the IPO will get to sell. So there'll be some float that comes in. After 6 months, the pre-IPO investors, which is a lot of the VC funds and so on, who may not actually have a mandate to continue to hold public companies, they may have to come to sell to the market. So there may be some selling pressure, and that float will build up. And that's when you'll actually see the real value as it's discovered by the company. I feel nice announcements and all that. I'd like to see this translate into something bigger. There are also issues with related party transactions, which I think over time we'll have to kind of resolve as they go by. There are other companies within this group that either partake of or benefit from services provided by and products of Ola Electric. So I think once you have a better handle on that, that's when you should consider it. For me, it's too early. I think a lot of investors have said, let's go in anyways. And I wouldn't treat too much into a 15% fall on the 4th day after it's listed. This is like babies with sugar. They can go any direction they want.
Okay, that's an interesting analogy. So basically, when you're not rushing to buy Ola right now, you're going to wait to see more evidence of sustained profitability and growth. I get that. Just to complete the point on the others, Mazgaon, the one that you own, and that entire group of stocks, the PSU defense plays, I think the more difficult thing is your holding. So the question is, I have a two-part question. First of all, whether this price fall right now, we're talking 25-30% down after a stupendous increase, right? Whether this is, unnerving you at all. At what price do you think you will start booking profits if you've had a thought around it? And secondly, Deepak, the issue with a lot of people is those who miss the bus or who've just been watching in awe, standing by the wayside. a lot of those will be wondering whether this 30%, 40, 50% drop, whether this is an entry point. It could be a trap as well. We don't know. What do you think is the case?
That's a good question, Survey. In fact, what I would say here is that if you're dealing with a pure fundamental play, you would probably not be in this stock at all. So because at some point in time, your valuation would be like, oh, this is way too high for a PSU company in this space, which has never traditionally done well. But there have been some changes in defense. A lot more value has been given to Indian manufacturers of submarines and ships versus buying a lot of the stuff from outside. So and a lot more of the replacements ships are being manufactured in India. So I think there is a bit of a quantum leap from the fundamentals of the past versus the fundamentals of today. But even then, valuations are a little high. They've run up, where I would say they're stretched. So you don't want to jump in to buy, and you have to give this stock at least 25-30% each time, because it's done a 25-30% fall, I think, just last year once. And if you were, phased by that, you would have felt like booking profits at that time as well. So you want to give this stock a little more leeway if you're a person who handles with both fundamentals and price action, and then take a call. And on the downside, on price action based investing, you'd actually want to lighten your stock if the stock corrects too much, because you can always pick it back up on the upside when it goes back up. If the story continues the way it is going right now, it's a pretty good story. I don't know how long it will continue, but I would say this is not. I would not advise people to just start jumping into the stock just because it's fallen close to 27 or 30%. I think you'll have to wait a little bit longer, see if the prices correct even more. I would personally give it a little more leeway. I can say this because I've gotten out of half my position, but I have a certain kind of drawdown in mind before I start booking further profits. But 30%, you have to give this stock.
Okay. All right. So wait by for more clarity on this one as well. I guess that's the call, both on Ola and on Mazgon. Two big themes, two big stocks. Thanks very much. Slightly shorter conversation today, but a very important one. So thanks for joining in, Deepak, and you have a good rest of the day. On that note, we'll take a quick break, come back on the other side, and we'll have a panel of guests joining in from the sidelines of the Motilal Oswal Annual Global Investor Conference. So wait by, some interesting conversations lined up there.
Okay, welcome back. Gary Dugan is CEO at Global CIO Office, and Niket Shah is CIO at Motilal Oswal Mutual Fund. We're now actually going across to the Motilal Oswal India conference, which is being held here in Mumbai. And both Gary and Niket are sitting down with my colleague Nimesh Shah, who's going to take us through some interesting conversation here. Nimesh, over to you.
Thanks, Prashant. Again, we're trying to just have an attempt of getting an FI perspective and a domestic perspective as well from the sidelines of the Motilal conference. Gary has been a veteran in the capital markets, over 40 years of experience across many large institutions like JP Morgan and Merrill Lynch. And Niket, of course, is now the CIO at Motilal Oswal. Gary, I'll start with you first. A very interesting feedback that I got from you that when you are advising clients to look at India markets, you said like global investors now have to look at India ex of emerging market. Do you think that's going to be a reality very soon, that a lot of global investors will ignore emerging markets but they'll still put money into India?
Well, absolutely. I mean, I think we felt even about 18 months ago that you couldn't just look at the emerging market block as a continuity. China is so different from India. India is so different from Indonesia. But the one thing we were most confident about was the Indian market. So we were extracting India out of the complex and saying we'll make a big long-term commitment to India, and the emerging markets will just pick them off as we see a tactical opportunity.
Sure. Gary, you've been advising close to $2 billion of advisory money for large family offices and ultra HNIs globally. What's the initial feedback when they look to invest into India? Are they now getting warmed up that this is a structural story for next 5 to 10 years and has to be invested in India now?
Absolutely. I mean, I think if you look around the world these days, you really struggle to find consistent quality growth. We can go into a sector called tech, but of course then that goes to sky-high valuations and people start to run away. I think, India almost stands uniquely at the moment as a country that can deliver to what's promised. A consistency of a political environment for the last couple of decades, it feels, but it's actually the last 10 years. But it's that consistency of the future. And I think when you can see compound growth rates of profits of 15% for the next 5 years, that stands way above anything else delivered by the world in a serious market.
Is that a reason why global investors has to look at India now? Because it's just in a sweet spot. Macro-wise, we've done well. And earnings are getting compounded every 2 years or every 3 years. So is that something that global investors will have to take a note of and look to invest into India?
Yeah, I think in the past people have thought of India as a tactical market. Yeah. You're in it one day and then there's a bit of a crisis and you run away again. But I think the last 5 or 6 years has told you it's wrong to run away. So it's better to put a marker down and stay engaged in the market through its ups and downs rather than run away and find that you've got to go buying it back at a higher level.
Sure. Niket, mutual funds has been a driving force for the markets to be at record highs, and we continue to see a lot of inflows into the mutual funds as well. You are now actively managing this as a CIO of Motilal Oswal. But I've seen your style. You've been a very concentrated player. Look to invest, take large bets, and act very fast. What is your sense on the markets currently? Is this a time for one to just be very quick in and out? And how are you approaching the markets now?
So Nimish, I think if you look at earnings growth in India, in this quarter, Nifty earnings growth has been about 4 to 5%, which is probably slowest in the last 16 quarters. Mid-cap earnings growth has been about 5 to 6%, again slowest in the last 16 quarters. And we have been slightly more cautious on the markets, being very, very selective. Our focus of this year is to do less mistakes, right? So when we started this year, we could clearly see, earnings growth kind of slowing down. And we want to ensure that we don't do, significant mistakes this year. If you don't do mistakes this year, I think you will end up in a very good outcome at the end of the year. So from a 25, 26 stock portfolio, we're now actually down to about 16, 17 stocks. We're trying to make the portfolio more and more sharper by the day to ensure that, there's no mistake. So that's broadly, I think, what we have been up to.
When you're saying to avoid mistakes would also mean that you're in the right sectors, right? And I guess you've been one of the contra guys to aggressively look at a few sectors like IT and telecom. Broadly, if you can explain your thesis on why you're bullish on IT first, And I'll ask you a bit on telecom as well.
Yeah, so I think, IT hasn't done well in the last 3 years, right? I mean, some of our IT holdings within the mid-cap and the small-cap space have done extremely well. But overall, from an industry standpoint, I think it has gone through some challenges in the last 2 years. We believe post-US election, some of those challenges are likely to go out as, the pipeline of the IT in terms of the funnel or the deal pipeline that most of the corporates have been talking about is very, very healthy. So that continues to remain healthy. I think most of the corporates or enterprise in US or Europe are waiting for some clarity on US elections to get over, and that the spending will, I think, in next year should come back in a meaningful fashion.
Sure. A word on telecom as well, because I understand you all were very aggressive in the Vodafone Idea FPO as well. But generally, from a telecom point of view, do you think the repair work has started, the tariffs are going to only go up, and it's a structural consumption story now?
Yeah, so I think, in initial part of the year, we did highlight that telecom looks like the sector of the year. And the key thesis was that India has actually seen no major ARPU increases if you take a 10-year backtrack record, right? So our view was that every year from year on, India needs to take a tariff hike because from the second half of the next year, most of these telcos have to start paying to government for the spectrum that they had bought 10 years back. And for me to pay and for some of these enterprises to go and pay to the government, you need earnings, right? And there is no way you can get earnings without a tariff hike. So I think we will see a tariff hike even next year and in the following year. So we might see a tariff hike every year-on-year basis, which essentially means a very strong growth for the sector for the next 2 to 3 years.
Niket, I'll come to you. You spoke about avoiding mistakes. But Gary, if I want to ask you, what are the key risks or what are the few, things that you'll be focusing very closely in terms of maybe potential accidents which can come either from the global market or from an India point of view?
Yeah, I think the thing that India would worry about is a significant increase in US interest rates. Now, today we're talking about when the Fed's going to be cutting. But you just feel in the background that maybe inflation hasn't been completely suppressed. And if we were to see further geopolitical problems, for example, in the Middle East, with higher oil prices, we could be talking about a Fed that just stops cutting interest rates. That can put pressure on emerging market currencies, and it makes everyone feel like risk off. So that's the one thing that we're watching for at the moment.
What about geopolitical risk? Because that's been one of the other reasons why a lot of investors are a bit worried as well. And we've seen a lot of geopolitical risk across the world, right? Whether it's in the Middle East or a lot of other countries as well. How much is the geopolitical risk, according to you, for emerging markets as well as for India?
I think it's still serious. I mean, we've still got a war in Europe that people have kind of forgotten about. You've still got the challenges in the Middle East. The good news is that maybe those negotiations have taken a turn for the positive over recent days, but you can never totally believe in it. But it is still something that could be a negative that all of a sudden has people taking money out of markets and a quick downdraft of 10% off equities.
Niket, the other sector where you've been very bullish on is the platform businesses. You all were the first to invest in Zomato at 50 rupees, if I remember, and now it's almost 5x for you. And even the Motilal Oswal private equity owns a large chunk of Swiggy. What's the story there, and how big could be this Blinkit story and the earnings potential for these platform businesses?
So I think, the reason why we like this business, obviously food delivery becomes a cash cow over the longer term. The real excitement is quick commerce business. In our opinion, for the next 3 to 4 years, you should see at least 125 to 150% kind of a top line or a GMV growth for some of these companies, which is quite staggering, right? And this kind of model is only, at scale is likely to happen in India because of the way our supply chains are there, the way our auto penetration is there. And we all have, a budget that we run on a monthly basis. So we do monthly pantry filling on a weekly basis, right? So that I think is quite, I would say unique to what Indian styles are. And I think these kind of business models are just started, just scratching the surface. What is actually surprising to us is that the tier 2 markets, where in some of the quick commerce, the tier 2 markets unit economics are much better than tier 1 markets. The adoption of tier 2 markets for quick commerce is much faster than tier 1 markets. So that has actually been a bit of a surprise for us. And we believe the runways is likely to stay here for the next 4 to 5 years. So we just scratched the surface in our opinion.
Sure. But in that case, Niket, what about, the EV market in India? Again, that's a growing market. You saw what happened to Ola after listing, doubled in just 7 days. what's your take on the entire EV space and overall on the autos as well?
So I think EV penetration has to move up in India, but I think both of them will coincide, whether it's ICE and EV both together. But within EV, I think we have very clear understanding that whether it's four-wheeler, two-wheeler, there is no major profit pool to be made, at least over the next 2 to 3 years. The profit pool is actually in the three-wheeler LCV side, because the vehicle tends to run for a longer duration of time in the same day, and hence it makes unit economic sense if you take a 5 to 7 year view for that vehicle. So, you know, the LCV market, the tractor market, and the three-wheeler market is where we continue to like within the EV space.
Okay. Gary, if I want to ask you, we spoke about some themes like food delivery, EV. You've seen so many global markets in the last many years. What stands out for you in terms of the big emerging theme as far as India is concerned?
Well, I think there's just so many, but the one I pick on it is the consumer sector and hospitality. I mean, I've been in and out of India on many occasions for the last 30 years and just seen this transformation. But it's basically the enabling of people who are getting incomes to spend it on a broader spectrum of services and things. The shopping experience, which goes from shops to malls, the hotel that goes from 2-star up to 5-star. All these things significantly increase the potential of the economy to grow much faster than it has done in the past, as has been evidenced over recent years.
Sure. Gary, I understand you were surprised with the kind of transformation we've seen in the digital payment in India as well, right? I guess missed out on digital payments on some occasions. Has that been a big transformation for you?
Absolutely, because it's something that wasn't even occurring in the West.
Yeah.
I mean, I did a quick trip to Goa and I couldn't pay for my taxi unless I had the right app, and I couldn't go to the beach bar and buy a drink unless I could tap my phone. I had none of these applications, and I just could not believe that transformation from, remember the dark days of demonetization, through to absolutely no need for money, which is incredible.
Right. Niket, before I let you go, last thing, the one thing that I've learned from you, talking to you on many occasions, this market also needs to be an aggressive seller at one point in time, and you've demonstrated that in some of your holdings. Tell us, what's the right way to look to sell as well, just from an investor point of view?
So I think for us, we strongly believe that buying is extremely overrated in India and selling is highly underrated.
Yes.
Everyone only talks about buying in India, right? What do you want to buy next? We do focus a lot on selling. We do focus a lot on what not to buy. And for us, that's quite important for us because that reduces the mistakes, right? The second thing, how we do take a decision on how do we sell, right? I think for us, earnings upgrade and earnings downgrade cycle is extremely important. We want to get into a cycle where we believe, for example, we believe IT is just beginning of the earnings upgrade cycle. From now, for the next 12 to 18 months, you will see earnings upgrade on a quarter-on-quarter basis. And that's something which really entices us to go overweight on a sector. And vice versa, it happens on underweight side. The second thing is, if you know that earnings are likely to get downgraded, automatically you find that valuations have been quite expensive. No sector in India does very well for 5-10 year period, right? And no sectors are extremely good for the 5 to 10 year period. So you have to manage these cycles. You can't keep portfolio static. If you keep portfolio static, then I think you will tend to underperform in the year.
Niket, thank you very much for joining us, and same with Gary. Thank you very much for joining us. Back to you, studio anchors.
All right, thanks very much. Very interesting sort of ideas there. IT, perhaps, something to look at. And Nimesh, do convey to Gary that now it's the reverse, right? Because when we travel to Europe, when we travel overseas, we feel it's so primitive. Why do we have to take out cash and pay through a card? We want to tap our mobiles and take our mobiles and pay everywhere, right? That's the India payments revolution. So please pass on our message. And we'll come back to you for the chatter in just a bit, Nimesh. Have to take a break right now. And then, of course, as always, all the buzz from dealing rooms with Nimesh, along with some of the final trading calls for the day as well. Back in a moment.
Welcome back. You are watching us here on Closing Bell. The Nifty hovering around that 24,700 mark. Importantly, Godfrey Phillips, that's the stock that's taking your breath away literally and figuratively. It's up 13% right now, 14%. In fact, this week itself, the last 2 trading sessions, it's up 30%. And that's not just a stray move. In fact, this month itself, it's seen a rally of 40%. And this year, we're just 8 months into this year, the stock has rallied a whopping 180%. So that's the kind of move that we've seen on Godfrey Phillips. Just keep an eye out on that. Volumes over the last 7 quarters, the business volumes, that is the cigarette volumes, have outpaced the industry. At the same time, you know, they have decided to go ahead and sell their retail business as well. So some bit of value unlocking out there taking place as well. So we'll keep an eye out on this stock as it moves on. But good time to get in T Street Chatter, where Nimesh gets us up to speed with what all the dealers are saying. But more importantly, Nimesh, you've been spending 2 days at the conference as well. So you've been speaking to a lot of people. As they say, what's the khabar?
Well, khabar, I'll come to the khabar later, Mangalam, because I've been even yesterday I shared some chatter from here on some potential blocks. From a market point of view, another strong day. So it looks like, you know, the momentum is clearly with the bulls, and that's backed by FI buying as well. What is interesting today is the rally is led by large cap names as well as the financial stocks. From a flow perspective, as I said, you know, this is backed by FI buying. Last week there was some large selling which potentially has got absorbed now, and there is a DI support which you know helps the market to go higher. What is surprising today is while the Nifty bank is higher, there is selling in some select bank stocks, is what I understand from a flow perspective, largely in the private bank stocks. So, having said that, in general, the momentum seems to be with the bulls, and there is a lot of momentum in the broader market stocks as well. You rightly explained, you know, Godfrey Phillips. It's been a big move in the last 1 week itself. So, you know, there are so much of momentum in this kind of broader market stocks that it just takes the breath away. But clearly, from a flow perspective, the buying seems to be clearly in the large cap names, barring some private bank stock where there's some bit of selling, and the momentum in the mid cap and small cap is largely backed by the domestic buying.
Stocks now, Nimesh, what are you picking up? Lots of blocks?
Well, so, you know, as Mangalam pointed out, khabar, blocks and blocks and blocks. So at least, you know, I'll highlight 3 stocks where potentially some large blocks can come. First one is Dixon Technologies. Stock is at a record high. But now I understand, you know, there could be some offer coming in Dixon Technologies in the near future. So that's one stock to watch out for. The other big stock to watch would be Ambuja Cements. Again, you know, there is a indication that there could be a large block in Ambuja Cements also coming very soon. And the most interesting name to me was Pratap Snacks. Been a underperformer, so to speak, in that consumption basket. But again, there could be a potential very large block, nearly 10% equity can change hands in Pratap Snacks going forward. So that's a third name. But in general, the sense, Prashant, is that there is a lot of offers in various companies, and blocks are pretty much on a daily basis. So that's a few important ones. The second name is Indus Tower. After some bit of consolidation, looks like some interest is back in Indus Tower. So there is aggressive buying from larger FI desk today in Indus Tower. And interestingly, this was one management which was well attended at the Moti conference as well yesterday. So there is an interest back in Indus Tower at these levels. The third stock is Samudra Motherson. Surprisingly, that's been a relatively underperformer post-quarter one earnings, and there is selling pressure from larger FIs. So it looks like some long-only funds are aggressive sellers in Samudra Motherson of late, and that's been the case today as well. And the last stock is Kirloskar Oil. Again, a surprising name, so to speak, because I've generally not heard this name from FI desk, but there is buying interest in Kirloskar Oil in today's market, and there are buy flows, so expect high delivery volumes, and that's backed by FI buying.
Okay, all right, got it. So lots of buzz as always. Nimesh, thanks very much for all the action, dealing rooms and the conference itself. Thanks for all the inputs. By the way, the market's holding up quite nice and steady, 125 points higher. Plenty of names on the upside today. And if you're talking financials, look at something like an RBL Bank, almost 5% up on RBL Bank, Ujjivan Small Finance Bank. So the tier 2, tier 3 financials are also having a fantastic run. PFC right now, 3.5% higher. And some of the PSUs, which were very subdued in the morning, they're turning around. Bank of Baroda would be a case in point. So some of the PSU banks, which weren't having such a great session like some of the other private financials, better afternoon for them right now. So let's quickly head back to Mitesh for some final ideas. Mitesh, has been a strong market. What are your final recommendations?
No, it's been a good market. LTTS is on the BTSC list. Keep a stop at 53.35. Look for 54.40 as the target. And the other one is a BTST on Nestle, which after a correction seems to be trying to move up again. So keep a stop at 2500 or just below it and look for targets of 25.40 for tomorrow.
Okay, all right. Thanks very much. We'll take a quick break on that note, and Mitesh, we'll see you again with the markets tomorrow. Come back after the break, and we'll get you the roundup of today's trading action and some more fundamental ideas as well. Welcome back. Well, it's been a good session. That's what we've been pointing out at every level, large caps, mid caps included. And the Nifty is now just about 1.5% again from the all-time high. The bank Nifty obviously has a greater distance to travel, about 5% away from the all-time high. Jay Bala of Cash the Chaos is with us. Jay, thanks for joining in. So such a wobble in global markets, and then it's back to the bulls charging ahead. What have you made of the price action over the last couple of days, and where do we stand right now from a global market standpoint, and of course the Nifty itself?
Yeah, thanks, Sylvie. Good to be here. After a 4-week break, for me, the markets haven't developed as a reversal signature. It's still sporting a corrective look. So it does look like the markets are headed higher, barring some abrupt reversal in the next 3 sessions. But the markets continuing to look bullish, the global markets as well as the Nifty. And but there are some jarring, data points which are not agreeing with the bullish outlook, which is the yen is continuing to likely to strengthen somewhere close to 127 in the medium term and 140 in the near term. So leave that aside, but we take each market on its own merit, and it does look like the drop, July-August drop, is a corrective, corrective down move, and further higher highs are due for the Indian markets as well as the global markets.
Okay, so you're still, expecting those kind of levels in the yen. That's interesting. Okay, let's see how that unfolds. But just within the Indian market, like I was just pointing out, that banks are still playing catch up. They're still not in step with the Nifty. Do you see that changing in terms of leadership right now in the market? What looks the most bullish to you?
Yeah, the Bank Nifty is a laggard to the Nifty, no doubt about it. And 51,950 on the banking index is an important resistance. And if that were to get taken out, we are looking at something like 54,000 to 55,000, the long-term resistance, which I've been pointing out for several months now. But the first stumbling block is 51,950. More than what is looking strong at this point, Reliance, again, another data point which is not agreeing with the bullish view. It's come down in 5 steps. And when a market moves down in 5 steps, it's normally part of a larger move. So we don't want to see Reliance gets stopped at just under 3,100 or 3085. Likewise, we don't want to see the auto index drop below 24,400, much below 24,400. So these are the chinks in the bull's armor at the moment. But what is likely to be strong, I think it's FMCG and the pharma names which are likely to be strong, in my opinion. So that's what I'm keeping my focus.
Strong on FMCG and pharma. Just keep an eye on the markets, though. The Nifty Bank is fairly off the highs, almost 150 points from the time we started the show. The Nifty, too, closing in on that 24,700 mark. It was comfortably above that mark when we started the show. So, the point is that at higher levels, maybe some bit of supply is seeping in our markets, specifically on the Nifty Bank itself, though we've seen some reduction from the highs on names like ICICI Bank, on, the likes of HDFC Bank, and the other index heavyweight, which is the Reliance that Jay was just speaking about. There you have it, ICICI Bank all but in the red right now. HDFC Bank too is hovering around the 50-day moving average of 1635 itself. Reliance currently off highs. Jay, you said that FMCG is a pack that you like. Is there any particular stock which you believe can outperform from here?
Yeah, I like Dabur at current levels, Mangalam. The stocks move from the post-election results low is looking like an incomplete move. So it needs one more high sequence at least. So I'm anticipating a level of somewhere close to 680 to 690. A stop of about 595 will make sense. And also from a pharma space, I like IOL chemicals and pharma. This has been a laggard since it hit 900. It's dropped somewhere close to 379 recently. This was my investment pick in 2018. It went from 110 to 898. And now it's looking like it's starting the next leg of the medium to long-term move. I have an objective close to about 530 for IOL chemicals and a stop loss of about 379. But if it were to take out 535, it will be a start of a medium to long-term move that will take out the all-time high at 898. So watch out for it. 535 is a very important resistance. The current short-term objective is 530. So, if it were to exceed 535, hold on for the medium to long term. And the third pick I have is REC. REC, again, looking very similar to Dabur. Incomplete move from the post-election low. The stop loss is about 560 and price objective close to 660.
Markets actually coming off a little bit, right? I mean, we're up 100 points, but from the highs of 24,734, this is now about a 60-odd point drop-off, which has happened. And I think a lot of it is come through. Actually, we pulled back very sharply since 320. So we were at about 24,705 at 320, and we're at about 24,676. So last 10 minutes has been sharp. Jay, a quick word on Mazgaon. From it's come off, right? Sharply. Where does it go from here?
Yeah, this was my pick in early June and July, and the stock has still got higher highs to work with, but it's stretched in the short term, and it was stretched in the short term, and that's the undoing that's happening. The supports comes at about 37.50. Probably from there, I'm anticipating a rally to resume somewhere close to 6,000. So still bullish on it, but nothing to act at current levels.
Okay. All right. Thanks very much, Jay, for joining in today. We just have about 30 seconds to go before the day closes out. It's been a good day, though the market is not closing at the highest point. There's been some profit taking in the last 10-15 minutes. About a 100-point run for what it's worth, a 0.5% gain on the Nifty. If we talk about the winners, it's actually the financials, banks and non-banks. Very, very strong day for the entire financials complex. Look at the life insurance plays. SBI Life, 5%, HDFC Life, 3.5%. Then you have something like a Bajaj Finserv, 3.5%. So the first three stocks are the non-banks on the Nifty. IndusInd Bank is at a good run. You have other names like Shriram Finance as well. Bajaj Finance are extremely strong on financials. Beyond financials, Hero Motors, Sun Pharma, Nestle, and Dr. Reddy's. These were some of the key gainers. On the flip side, Bharti Airtel has lost some ground today, 1.5% down. ONGC is on the losing side, and Adani Enterprises is the third weakest stock on the Nifty. On the mid-cap screen as well, Prashant, there have been big gainers today, right? The index itself has closed in a better fashion than the Nifty, with a gain of about 0.8% and lots of high flyers here.
Oh yeah, I mean, the Angels and the Motilal Oswal, IIFL Securities, all doing well. These are all brokers. So on your screen now, Anand Rathi, of course, is wealth management. IIFL Securities and Motilal Oswal are the other two. But Godfrey Phillips was a big gainer today. Out of the blue, big move. KEI Industries, some of these cable and wire companies. Balrampur Chini was up sharply. All Cargo, we've been highlighting, that was up and about. There was Cyient, the IT company, which did well. JSW Energy was up about 4% or so. So yeah, I mean, a fair bit which came into its own. On the downside, Ola and FirstCry, both recent listings. Of course, Ola has had outsized gains since listing, nearly doubled. That pulled back, and FirstCry was also a bit lower in trade. So those are recent listings. Well, I think we'll wrap up the market action and closing bell here for now. Thanks very much for staying with us, but we'll just take a quick